Welcome to Talk Tickers. Today, we are digging into a real head-scratcher from Digital Turbine's latest earnings report. Honestly, the company posted some seriously impressive numbers, but the market's reaction? Well, it was confusing, to say the least. So let's get to the bottom of what is actually going on here.
So, here's the puzzle we're going to unpack together. Digital Turbine didn't just meet expectations, they blew past them, beating on both revenue and earnings. They even raised their forecast for the rest of the year. And yet, after all that good news, the stock still managed to close down over 5% the next day. So, what gives?
All right, before we even try to solve that puzzle, we have to look at the numbers themselves, because on the surface, this was just a fantastic quarter. We're talking a clear, undeniable beat on all the key metrics. First up, let's talk about the bottom line. The company reported non-GAAP earnings per share of 18 cents. That beat the consensus estimate by 2 cents, a real solid outperformance right out of the gate.
And on the top line, yep, it was the exact same story. Revenue came in at over $151 million, which beat expectations by more than $5.5 million. This wasn't just some minor beat, it was a pretty significant one.
And this is where the story gets really compelling. Just look at the difference here. Revenue grew a solid 12% year over year, which is great. But their adjusted EBITDA, that's a key measure of profitability, it shot up by a massive 76%. This is a textbook example of what we call operating leverage. It basically means management is squeezing a lot more profit out of every single new dollar of sales. That's super efficient.
And this growth wasn't just isolated to one little area. Their core on-device solutions business was up a healthy 9%, but the real star of the show, that was the app growth platform, which jumped an incredible 19%. That is a fantastic sign for their advertising tech business.
Now, one of the absolute biggest wins for investors this quarter was the work management did on the balance sheet. I mean, think about this. In just 1 year, they've managed to slash their net debt from over 5 times their earnings all the way down to about 3 times. They even pulled the plug on their program of issuing new shares. That is a huge vote of confidence for management and a really big step in making the company a much safer investment.
So, with these strong results and the company on a much stronger financial footing, management wasn't shy at all about laying out their vision for the future. Let's take a quick look at their game plan.
CEO Bill Stone laid out 5 key areas of focus. It's a really clear strategy, and it's all about using their unique data to their advantage, creating a cycle of growth that basically feeds on itself, and crucially, jumping on big changes in the industry, like the rise of alternative app stores.
This quote from the CEO really nails the core of their strategy. They call it the flywheel effect. The idea is actually pretty simple, but it's incredibly powerful. So they help over 80,000 apps make money from ads, and then they turn around and use that same technology to help those apps find new users. See? More users means more ad money, which in turn means more new users. It's a cycle that, once it really gets going, can be just incredibly powerful.
And hey, this isn't just a bunch of fancy talk on some PowerPoint slides. They are already putting this strategy into action. Their SingleTap product, which is key to their plans for those alternative app stores, is already up and running and making money with 3 of the world's biggest mobile game developers. So this isn't some far-off future plan, it's happening right now.
Okay, so let's just recap for a second. They beat expectations, they raised their guidance, they've shored up their finances, and they have a clear plan for the future. Which brings us right back to where we started. Why on earth did the stock drop? Clearly, the market is seeing something we haven't talked about yet.
And this slide, this really tells the whole story. Right after the earnings came out, the stock just went on a tear, jumping almost 17% in after-hours trading. It was pure excitement. But then, reality set in. By the end of the next day, all those gains were gone, and the stock was actually down over 5%. The market had some time to think it over, and it very clearly changed its mind.
So what changed in those 24 hours? Well, it's probably a mix of things. For one, the stock had a great run leading up to the report, so some investors were likely just taking profits off the table. But there's a bigger issue at play here. The market is skeptical. They're looking at these fantastic growth and profit numbers, and they're asking, okay, but can they do it again? The ad tech space is notoriously competitive and cyclical, and investors have been burned before. The message from Wall Street is pretty loud and clear. Nice quarter. Now show us you can keep it up.
So if you're an investor, how do you weigh the company's strong performance against the market's obvious doubts? Here's what we think you should be watching for. On the next earnings call, it's all going to come down to 3 things. First, can they actually hit the higher targets they just set for themselves? Second, Are they going to give us some real, hard numbers on SingleTap to show that it's more than just a promising idea? And third, can they keep cleaning up that balance sheet? That's really what the market needs to see to become a true believer.
And that brings us to our rating, market perform. There is absolutely no doubt that management has done an impressive job turning things around. But after the stock's big run-up, a lot of that good news is already baked into the price. The market is in total show-me mode right now. Until Digital Turbine can prove that this quarter wasn't just a fluke, we think the stock will probably just track along with the overall market. The big question is, will one more great quarter be enough to win over the doubters? We'll see.
This is not financial advice.